Pender Alternative Arbitrage and Alternative Arbitrage Plus Fund are aimed to provide low volatility, absolute returns in nearly all market environments. Because the funds are investing in specific corporate events, they have less correlation to do with the broader markets. We focus largely on small and mid-cap North American transactions, which we believe have greater inefficiency and also a shorter duration, allowing us more opportunities to reinvest that capital. We also have the plus version of the strategy that uses leverage to enhance returns for investors. The funds are also an organic extension of our equity platform. Within our equity team, the team uses a private equity approach to public markets, where they actually assess the private market value of a company, who are the potential buyers, and what they're willing to pay. So we can leverage those insights, that due diligence, that analysis within the fund, and that gives us what we believe is a distinct edge. So the fund is ideally situated for investors who are looking for a source of low volatile, non-correlated, absolute returns. It can complement an equity strategy or be a substitute or complement for a fixed income allocation due to its diversification benefits. The strategy can also be tax efficient as the returns are largely capital gains. So the core investment strategy of the fund is investing in merger arbitrage transactions. So we're seeking to capture the spread from when a deal is announced until it ultimately closes. We're assessing the probability of the deal closing, understanding the risks, ensuring that the company can secure financing, that the target shareholders are willing to support the deal, and then holding it through to fruition and completion of the merger. It's like underwriting insurance. We're trying to understand the risk associated with the merger and ultimately ensure that we're getting fairly compensated for taking on that risk. So risk management is core to the arbitrage strategy. From the initiation of a position in the fund, we're assessing the probability of that deal successfully closing, the downside in the event of a deal break, and managing the position size accordingly. From there, it's all about portfolio construction. So we're investing in dozens of merger deals at different points in the process of closing across various sectors, industries, and deal types, allowing us to diversify that exposure. We're also managing the position sizing of each deal to a max size and also limiting the potential drawdown of each position in the fund to limit downside exposure. Within the arbitrage fund, there's three key drivers. The first is sourcing attractive merger deals. The second is underwriting them accordingly for the duration and risk. And the third is recycling the capital from successfully completed deals. Because of our focus on small and mid-cap North American transactions, which typically have shorter duration and lower risks, we get more opportunity to reinvest capital with the probability of increasing the long-term returns for the fund. The funds are designed to be resilient across various periods of market volatility because we're investing in specific corporate events and transactions that have a short duration. They have less underlying correlation to equity and bond markets. Historically, merger arbitrage has delivered positive absolute returns in the variety of different market environments. And because we're focusing on specific events and catalysts that have little to do with the market environment itself, we can actually lean into volatility. When there's disruption in volatility, spreads typically widen, and that allows us to reinvest and add additional capacity to our various positions in the fund. The Pender Alternative Arbitrage and Alternative Arbitrage Plus Fund provide investors with a low volatility source of non-correlated diversified returns, making it a great allocation within a traditional equity and fixed income portfolio.